Well, we did our analysis over the weekend and we came up with two basically potential stocks. Netflix, NFLX, and Avon Products. We've eliminated Avon Products, though we're going to keep it in the back of our mind for a potential gamma trading in the future. And we're going to go with Netflix. We calculated the at-the-money straddle at $2.80 over the weekend. This is Monday morning, and the current straddle at the money is $2.50. So you can see that just over the weekend we lost 30 cents in value on the straddle, or $300 on a 10 contract straddle. So you need to be able to pick a stock in which will trade fairly actively in order to counteract the theta decay that the stock is going to experience as we get closer to expiration. Every single day, let's go over to our analysis tab here for a second. Every single day that goes by in which the stock does not move, we will continue to lose $63. Now we're getting close to expiration. This is going to be significant in how we make money. So what we need to do is, when we do place this order, we need to consider carefully the theta decay and the current chart. So let's take a look at a current chart. This is a 60-day, 60-minute chart. Now we only have 20 days left to expiration here. Well, actually 18 days to expiration. We do want to get close to that expiration date. We want to be able to do this closer because gamma at this stage, let's see if we can pick up gamma here. Gamma here is highest right at the money. And it does affect our delta. We want it to affect our delta so that we can trade in and out of the stock. So let's take a look at this particular trade on the chart again. Since we only have about 20 days, which is really about this period right in here, that's 20 days of trading approximately. You can see it's moved pretty good, so there's been some opportunities here, and what we want to be able to do, of course, is get into this trade and then manage and trade these swings. So we're going to go ahead and enter the trade. Immediately you can see in our Analyze tab that we are long 179 deltas. In order to get this to delta neutral, as soon as we put the position on, we have to sell 179 shares. Now you can. This is where it really gets interesting at this point. What I like to do is, rather than using the standard mode, I like to go to $2, $5, minus $2, and minus $5 for price slicing. In other words, what will happen to my delta if the price of the stock moves up by $2 or if it moves down by $2. Now I like to set it at $1 increments, so I can go over here and set these at $1 increments rather than $2 increments, and I'm going to set the $5 at $2, and let's see what happens. Whoops, I got to go negative there. Let's see what happens to our deltas as the price of the stock changes by $1. This is really important when it comes to determining the delta of your position, because if the stock moves up by $1, you're going to be long 406 deltas. So you need to sell 400 shares at $28.97. If it drops to $27, you're going to be short 79 deltas, so you need at that point to buy 80 shares in order to get delta neutral. We start out with a position that is long 177 deltas, so we need to sell approximately 170 shares in order to get fairly delta neutral on this position. So what we're going to do is we're going to go over to, let's take a quick look at the chart. I'm going to go over here, I'm going to bring up Netflix, and we are going to sell 170 shares of stock in order to start out our position. That will bring us to a delta neutral position, relatively delta neutral. So now we know that if the stock moves up 1 point, we're going to be long 231 deltas. If it drops 1 point, we're going to be short 262 deltas. At those points, we need to sell. If it moves up $1, 230 shares, and if it drops to 26.95, we need to buy 260 shares. But remember, we're already short 170, so that will affect our deltas as well. Now we're going to go ahead and enter this order, and we're going to do first trigger sequence because we want our straddle to be entered first, and we have to get into that straddle before we actually get short the stock. So let's go ahead and enter that. Well, evidently Netflix is not available to borrow, so we are going to have to pick another stock. Yeah, you can look up here. It says hard to borrow, so our order was rejected because we cannot short the stock. It's very hard to borrow. So I guess we're going to have to go to our second choice, which is Avon Products, and that does happen once in a while. So let's go to Avon. Right up here, it does say easy to borrow, so hopefully we'll be in a better position to trade Avon. Let's see, Avon Products. Let's take a look at their chart again over the last 20 days. And this also has moved fairly significantly. In fact, it's up quite significantly right now, 41 cents for the day. Let's take a look at the current straddle. The current straddle is 323. Let's just make sure that is the cheapest straddle that we can buy. We'll go down to the 30s, and we'll go up to the 40s, and it looks like the 35s are in fact the cheapest. Let's go over to our Analyze tab. So this is real world, you know. I mean, we went to do the Netflix trade, and we found out that it's not very easy to borrow the shares. So, especially with the new regulations on shorting stocks, you do have to borrow. You do have to borrow the stocks. Of course, retail investors always had to do that. With this position, we are long 400 deltas on our straddle position. In order to get delta neutral, we are going to have to sell 400 shares. So let's take a look at these slices. I'm going to go up $1. I'm going to go up $2, and I'll go up $3. And I'll go down $1. I'll go down $2, and I'll go down $3. So we are currently long 405 delta, so we need to sell 400. We need to sell 400 shares as soon as we open this position. So let's go in here, and we're going to sell. $400 shares. Let's bring that over to the Analyze tab. And that brings us to a delta neutral position. Now, if it goes up $1, we're going to be long 178 deltas. If it goes down $1, we're going to be short 194 deltas. And if it goes down, then we can sell some of the shares that we purchased on the open to be delta neutral here. Let's see what the current stock price is. It's at $36.74, and we are buying the $35 straddle. So that's how we're going to enter our order. I'm going to buy the straddle, and we're buying 10 contracts, and we are selling 400 shares of stock. Now, the last thing we want to do is take a look at the chart again and see exactly where the stock is and where it has been. Now, it's very interesting that we had a pretty good run up here in the morning here. Looks like there were ample opportunities over the last 20 days to trade the stock. So hopefully this will be a winner for us. It looks like the shares are easy to borrow. So that's what we're kind of looking for. And let's give it a shot. Just make sure that we are in fact delta neutral here with the current stock prices, and looks like we are. So the only thing we need to do then is just to make sure that we can in fact get the straddle. So we're going to try the straddle first, and then the sequence. In the sequence, we are going to sell 400 shares short of the stock. It says easy to borrow, so hopefully we'll be able to get this position on. And then in our worksheet, all I did was make a notation that the Netflix was hard to borrow and the AVP was easy to borrow, so that's the one that we have selected here to do our trade. Now we're just waiting for this to be entered, and hopefully we'll be able to get our straddle here at the mid price. Let's keep an eye on the chart and see where we are. Looks like the price is just kind of hanging around right around 36.73. Hopefully we'll be able to get our price. If not, we'll wait a couple more minutes and we will go ahead and replace that order, cancel that order, and replace it with another order. So we've waited a few minutes here, and it looks like the it's been over 5 minutes now. It looks like we just got filled. Okay, now they're working on our short order. Unfortunately, the price has moved, so now we need to do 375 shares. Let's see, we have the straddle. Let's get that rid of that. Let's see what we need in order to get delta neutral here. About 380 shares. We're going to be slightly long delta here because if we take a look at the chart, you know, it's up there, but it's not. Let's take a look at the 60-day chart. The price has come up a little bit, but let's go ahead and let's go to our Analyze tab. In order to be pretty much delta neutral, we need to sell about 390 shares here instead of 400 at the current price of 33.65. So we'll just go ahead and do that and enter that order. And it looks like we're going to, and we sold it. So we have now a delta neutral position. We are short 390 shares. We are delta neutral, and we are long the 35 calls, and we are long the 35 puts, and we are in a delta neutral position. Now, if the stock price should move up by $1, we will be long 178 deltas, so we'll need to sell another 178 shares of stock. If it moves down $1 to 35.66, we will need to purchase 200 shares of stock, and basically what we'll do is, since we have 390 short, we will purchase those 230 shares out of our existing inventory and basically cover that short stock position in order to get delta neutral. Now, as I mentioned, you can do this as a semi-automated trading system. In other words, what we can do here is we can enter our order to sell another 170 shares once the stock gets to 35.65. I kind of like to do it around 200 shares. I like to be 200 deltas long or 200 deltas short before I actually go ahead and enter those positions. But you can enter the orders. For example, if the stock price goes up $1, you can short another 200 deltas at 200 shares at 37.69. And the way that you would do that is to go ahead and go to your sell tab, go to your trade tab, and say that you want to short another 200 shares. And we can do that at the current price. We can set the limit because we want to do it at $37.69. So we're going to raise the price at which we want to sell an additional 200 shares at $37.69. Because our analysis tab is telling us that in fact that is where we will be long an additional 200 deltas. So 37.69 is where we want to go short. It's approximately 180 deltas, so we'll just bring that down to 180. At 37.69, we want to place that as a limit order, and we want to do it as good till canceled. We want to keep that order open. And if we go back to our Analyze tab now, what we want to do is we want to buy 200 shares at 35.67. So in other words, if it drops $1, we want to buy back some of the shares that we shorted here. We want to sell 200 shares at 35.66. So in other words, what's happening is you can simply put these orders in and let them run. So if you actually, and people are kind of like, well, you know, gee, you're putting your orders in, you don't even know where the stock's going to go. That's correct. We don't know where the stock's going to go. But if it goes up, we're going to short another 200 shares. Now, how does this actually work in reality? Well, in reality, if we're up $1, we short some more shares, we are covered by our 10 long positions on for the 35 calls. So we're really back into a delta neutral position here. And now the deltas are changing slightly, so let's see. If it drops down, we can always change these orders later too. Let's see if it drops down to 35.60. We're going to buy 200 shares back. Now you can move these around any way that you want. Let's see, we've got to go down to 35.60, which we can just kind of type in if we want to. And we are going to make that a good till cancel order. And basically what we can do is just enter these orders, and then, you know, if we sell another 160 shares and it goes back down to 35.60, we're going to end up buying shares. The only thing that you really need to keep an eye on is, you know, if your deltas change before you actually get these orders in. So in other words, as the stock drops, you know, your deltas are going to be, you know, changing. So right now it's already changed to 35.59. Now we need to buy 220 shares. So I mean, it does change around a little bit, but you could enter these orders. Let's say you have something to do and you don't really want to play around. You can enter both of these orders if you don't have time just to kind of sit down and look at your stock. So, you know, as long as you have your prices right, you know, make sure that you take a look at your Analyze tab here. Now, you could also do this based on the chart itself. In other words, if you're a chart person, if you've identified support and resistance points on the chart, you can also set your limits to those areas. In other words, let's say you think this is a support area right here, and you think this is something like a resistance area right in here. You could set your, if you think we're going to be in a trading range for a while, what you can do is you can set your prices to purchase stock when it's at 34. let's see what level it's 34.69, and sell it when it's at 37.07. That's a pretty wide range in which we can actually trade this stock. So if you think those are important support and resistance points, you can actually place your orders in to buy and sell at those levels. Remember that your stock position is covered, your short position is covered by the 1035 calls, and you have you're long the 35 put, so you're protected in either direction here. Now, one thing before I do this, I'm not going to, you can enter these as orders right now if you want to, and just let them run, and then when they're filled, of course, you can always enter in new orders in order to capture the price movements, but I'm not going to do that right now. I'm going to delete both of those. What I want to do is I want to show you how we enter these positions into our worksheet to keep track of our position. We're going to go over to sheet 2. Let's see, we have to enter into the information. We got 10 contracts. We have to enter the straddle price. Let's just take a look through our we got the straddle price at $3.15. We take a look at our order book here. Today's date, which is July 26th. We have 18 days to expiration. We want to make sure that we keep an eye on that at all times, because the closer we get to expiration, hopefully the more opportunities we'll have to trade this stock. Now, we sold 390 shares, and we sold it at the price of $36.64. And so we are net short 390 shares right now. So now when we go into a I'm going to put a little minus sign in front of that one. When we go into the position in which we have, when we buy those shares back, and we bought those and we put in here, we include our gross profit and loss, whatever fees that we've incurred here. We had a $5 fee, I believe. Let's just go ahead and let's see exactly how much that is. Yeah, that was $5.40. So it's relatively inexpensive to trade stock rather than options all the time. And then what we do is we'll keep a running P&L. The actual cost of these was $3,150 for the straddle. And now what we want to do is the current market value. We want to keep the current market value, the current market on the straddle. So every once in a while, you can come over here and take a look at what the current straddle is selling for. Let's see, if we had to go ahead and buy the straddle again, actually if we wanted to sell the straddle, we'd get that price. It's at $305. Obviously the difference is the bid and ask spread, but we're not going to fill that in yet. What we want to do is just log all of our information so that when we do a trade, we make sure that we keep track of our, oops, what is today anyway? Today's the 28th. We want to keep track of our running P&L as we go along through the trade. And that's all we really want to do. So right now that's what our position is. That's our straddle price. We bought 10 of these. In other words, and our symbol is AVP. Our date, our total cost. what we'll do is, since that is our cost, the $31.50, as we make a profit on our gamma trading of the stock, we will enter our gross profit and loss into each one of these in our running P&L and subtract that from our cost of $31.50. In other words, now between now and the expiration in 18 days, what we want to do is not only have the value of the straddle, ideally we'd like to have some value left in that, but we want to be able to make more from our trading of the stock as we get closer to expiration, to not only go above and beyond the $31.50 that it costs us to enter into the straddle, but also way above and beyond that in order to make a really good profit on this trade. So we're going to save that, and we're going to come back to this. If I have to make an adjustment to this position today, you guys will be the first to know, because that's exactly what we're doing. We are going to keep an eye on the deltas. We're already short 43 deltas, so the stock has moved down a little bit from where we shorted it at 390. Once we get to, now this is the way I set it up. Once we get to the point where we're about 200 deltas short, I'll buy back some of those shorts that I put in there in order to lock in the profits. So, I mean, you could do it at 100 deltas. I mean, let's say, if we're short 100 deltas and the stock goes down, then you could, buy back some of the 100 shares of your stock. You could do it every 100 deltas if you want, or you could do it every 200 deltas if you want. But as long as the stock continues to move, that's the ideal, absolutely ideal situation for us here. So that's the strategy. That's the way we're going to be doing this. Hopefully the stock will continue to cooperate and move in a good manner so that we can actually lock in some of our profits here based on our short and long positions. That's it for now. Trade with confidence. Hello, Tradeologists. Well, we're towards the end of the day here, and we're just taking a look at our position on AVP. Basically, what we have here is we're short 100 deltas, and if we take a look at the risk profile, we have a small profit for the day, and you know what? I'd like to lock that in. So since we're short 390 shares, and the stock has been down, let's go over to our charts here. And it looks like it's going to be closing down here. We're going to take a little bit of profit here and close 100 shares out of the 390 that we're short. That will give us about a $50 profit for the day, which will help offset the theta decay. The stock didn't move that much, but you know what? That's fine. We're just going to close that out. We bought 5 back, and we're back to delta neutral now. And we're still 290 shares short. So we locked in about $40 profit for the day, and we'll hopefully we'll see what we can do tomorrow. But the first day, basically we just treaded water. I mean, the stock really didn't move that much. It did come down here. I could have covered a little bit here. I guess in hindsight, that might have been a pretty good move. But you never know if it's going to continue lower or not. But we captured a little bit of profit today, at least to offset our theta decay, and we are back again so that we can continue to gamma trade this for tomorrow. So 40-day profit so far, and that's where we stand. We will continue to look for new candidates. I've already got a couple more on here. Let's see, I put Doug, I put EEM, which are a couple of ETFs on here for some potential candidates that we could take a look at for gamma scalping. Let me just draw your attention to one thing here that somebody was asking me about. How would you know? Right now we're delta neutral on the position. We're short 290 shares. We have 10 contracts on the straddle. Generally, when would you know when to buy your shares back, or to sell some additional shares, or to buy shares in the stock? In other words, how would you be able to determine what the move would be intraday before you would actually have to make a purchase or a sale? Well, an easy way to do that is to go back to our probability analysis tab here, and take what the current range is. Okay, the probability of touching, which is the current range, and that's 41.64 minus 31.12. That gives us 1052. And then we just take that and we divide it by the number of days that are remaining in this particular option cycle. So there's 18 days left, divided by 1052, and that gives us a 58-cent move. And basically what you can do is you can say, okay, if it moves up 58 cents, I'm going to adjust my deltas. If it moves down 58 cents, I'm going to adjust my deltas. Now, every single day you can do this. You can take a look at the probability of touching number and divide it by the number of days remaining in that August expiration cycle. If you want to, you could probably go over here to your chart and we could make a little, we could call this the intraday expected move, and we could just list it here. The current date, let's see, it's actually by day here, so it'll be 58 cents. So then what you do is you just take a look at the current stock price, and you would take a look at what the, if it goes up 58 cents, that's when you would look to either sell, or buy back some shares if it's on the downside. But that's the expected intraday move based on the probability chart. As we get closer to expiration, the probability of touching between these 2 points is going to get smaller and smaller and smaller and smaller, so that the actual probability of intraday movement in that stock is going to get smaller and smaller as well. So we can say right now with some degree of probability that a 58-cent intraday move is probably normal for that stock. And that will help us determine when to buy or sell shares. So I hope that was useful for you. We're going to take a look once more at our position here. We are delta neutral, almost perfectly delta neutral, just slightly long delta here at the close of the bell. And we have our 35 calls and our 35 puts. We have 290 shares short on our in stock in our inventory. And hopefully tomorrow we'll be able to capture some additional profits. We had a small profit today of about $40 on our scalping position. But hopefully tomorrow we'll be able to do a little bit more. So stay tuned and trade with confidence.